Welcome back to MainStation. So today I have a market update for you on the major stock indices and precious metals. Also, I'll be showing you the charts of the popular tech stocks like Amazon, Apple, Tesla, and so forth. Most likely, if we have time. Otherwise, I'll be going over them some other time. So I'll see if we find time. And yeah, so let's get started. So we're looking here at the S&P 500. This is the last update. I said that we could see a bounce playing out if you get to the daily time frame. Yeah, the bounce hasn't happened yet. We've seen some short-term upside, and yet are now below the 200-week moving average, and this is seriously bearish. We have not yet seen them completely turn. We had a death cross right here, and I just check real quick if I have to write of the 12th and the 26th moving average EMAs right here, and now the 12th is below the 26th, which is bearish, and we are approaching also a death cross of the 12th and the 100 week. So if we see further downside, we see a death cross coming, and then are looking for all the moving averages to diverge and basically go just into the opposite of a bull trend. As you can see in the bull market, you see the 12, the 26, the 100, and the 200 like this aligned from below to high on the average range, which is respected in the moving averages, in the moving average. So which is also the reason why the smaller time frame moving averages like the 12 and the 26 move more quickly, since more recent price data can be respected more thoroughly, and like on the 200 moving average, 200 candles or the last 200 candles make the current price move. So there's more data included, and makes it a therefore slower moving average. Right. So, nonetheless, we haven't seen a bounce yet, and are below the 200 week. We already been below it, as you can see. After 2008, we had some struggle getting above it and maintaining a higher low. So. But this has been now 7 years ago, more like 7.5 years ago. So this is quite respectable, seeing this. And as I already told you, it looks very much like what we had in the beginning of 2008. And I'm very, very interested actually in this, and I'm quite excited. So if we go to the daily, just pure hammering of the S&P 500. You can see we had a little gap up, like just barely reaching the 12th hour moving average on the hourly time frame, like not even touching it, and are seeing further downside. If you just go to the 15-minute, maybe we'll see, you'll see it right here, and not looking too good for stocks, at least. So we can very much see a wick through, maybe see a bounce in a couple of days. But if not, and we see like consolidation on the moving average, then I'll be looking at the trend line right here, and we go from logarithmic to linear chart like this. We have a very nice trend line since 2009 and 2008, and I'll be looking on the linear. It's around 220, and on the logarithmic it's around 208 or 210. So that will be my next price target. If we just go, if we respect further support and resistance, and it will also be around this level. So it would make nice support. Yet I don't know if it's going to hold long term. We could very much see a relief rally, which would be actually nice if we want to see further downside and a continuation or a starting of a bear market. In my opinion, we actually started a bear market, and yeah, I could be wrong, no doubt, but I think not. So if we go to the Dow Jones, just very similar price action, just complete hammering. Like seriously, we also seen a bear flag on the top, and like a drastic drop. If we go to the percentage wise, yeah, like 9% since 9% since breaking of the channel line on the bottom, or the trend line, my bad. So yeah, since 10 days, just complete hammering, and like we are in pretty much free fall, in my opinion. If we include the moving averages, you can see they go inverse, and we are seeing now on the daily. Actually, this is exciting. We are just before a death cross of the 200 and 100 weekend, yeah, or 100 day, my bad. We are on a daily time frame. So if this happens, and we'll see the 200 day go above the 100 day, which in my opinion is most likely, this is gonna be interesting, because the last time we've seen the 100 go below was like after, in 2015, when we had like this consolidation pattern. We could very well see this, but do you see this bear flag? And this just amazing RSI divergence. Like seriously, with a higher lows, break to lower highs, we actually seen more upside on the RSI. But you see, like from this high to this high, it was a bit above, but like look at this. That's some nice divergence. And if we go to the weekly, yeah, it's just very clear. Yeah, the divergence on the RSI, and right here, yeah, this is bearish, the divergence, of course, which has been playing out. We are approaching the 200 week moving average on Dow Jones, and this could act as support, since it has been in the past time, or in the past. We could also see a wick through and go above. A relief rally would actually be nice, If we just go back to the S&P 500 on the weekly time frame, you can see in 2008. I'm just comparing this to this. Yeah, you can see also a smaller divergence on the RSI. We had or if we just it's respectable. Yeah. No, not really. Yeah, not really. But you can see here a smaller higher highs, and here we have smaller lower highs. Yeah, and it's a bit more profound, right here, and then a breaking of the bear flag and a retrace. So we could very well see just a retrace to either the support right here, this trend line, the moving average, the 100, and it would just all coincide with a nice relief rally, finding resistance right here and then breaking below and finding lower lows. Yeah, so in my opinion, for the near future and in the near future, we could see a relief rally, maybe up to, maybe also up to 8%. If we are comparing this to 2008 and 2009, we had like a 10%, 11% retrace, and before we went lower. So, but in long term, this is just very bearish. On the 200 week on the Dow Jones, we also have seen now a death cross of the 12th and the 26th moving average, and the 12th is soon approaching the 100 week. So just not all very good. Just not very good. And the trend line has also been broken. Well, if we're comparing this to gold, we actually seen a nice day in gold today, and we've seen a nice relief rally after this low, and I thought this could be playing out as a bear flag, but it has been a very nice bull move since since August this year. And yeah, so I told you about this symmetrical triangle, which has been which trend lines and channel lines have been respected very nicely, and we are now seeing, or we could see, a bull break of this trend line right here, which would be very interesting in my opinion, and it will coincide with an equilibrium and a tightening range, and I don't know yet where it will go. If we see like this as a pole and this as a flag, then we could see much more downside. If we look at this as a pole and this as a flag, well then this could be interesting, and we could see much more upside in gold. Yeah, so I'd be watching gold closely, especially since we are just seeing complete hammering of the stock market. Yeah, very interesting times. If we just look at the Nasdaq, yeah, just the same basically, complete hammering. Like seriously. Oh, this is interesting. On a daily, we are seeing a death cross after 100 and the 100 week, on a 100 day and 200 day. Well, that's exciting. We are now finding a little bit support on this trend line, a little bit. You can see where this trend line, if it just remove the moving averages. It has been respected very nicely actually, and it could of course wick through like a bit here, a bit here, and a bit here maybe, but if we consolidate and don't retrace like we did back here and back here and back here and like here, then boy oh boy, not looking too good. And on the Nasdaq, it's my bad. I'm still a little bit off from the holidays. We are, or at least I'm watching closely the level of $120, which has been the peak in the .com bubble in 2001, and I think we could very well see a support right there. If this is going to be broken, then that's interesting. That will be very interesting in my opinion, since this has been nice resistance and it hasn't been retested. So in my opinion, this trend will not hold. If it will, well, okay. But in my opinion, it's a matter of time since we come back down, retest this area, and maybe then see further upside. But this is a drop of still about 20%, and or 22-25%. And if we just consolidate on this price level, then it's also not looking too good, and we could see a break of this support and resistance line. Well, if we're including the moving averages bit now, you can see we are on the weekly approaching the 200 week. If we see like we could see a break of this trend line, see a retest of the 200 week, and go above both of them again. We'll see. But yeah, exciting times, very exciting times. If we're comparing just now silver, oh well, that's nice. Oh, that's nice. Oh, that's awesome. Hey, I expected this, you can see. Man, I traded this right here, and I traded this right here, but damn, it took like so long. It took so long. I've been waiting for this now since a couple of months actually. Since like right here, since October I think I waited for this, traded it right here, but nothing really happened, and now we're seeing a nice move to the upside on silver. So this is nice. This is cool. Yeah. I'll be looking for an entry, especially if we see consolidation, further hammering of the stocks. Like right here, this has been my target, and I thought it would go up right here, but well, I'm off a couple of weeks. But this is nice. This is nice. This is awesome. Yeah. If we break this level, man, then I'm interested. Because, as you can see, we had a descending triangle, not forming for a long ass time. And this descending triangle right here has been broken, and then it went into a descending channel, and this descending channel, well, it's looking for upside, for further upside. All in all, if we include like price data since for the past decade or so, then well, silver is still looking bearish. Yes, very much actually. We could see maybe even breaking of this channel, of this downward channel, and just see further consolidation, like into 2001 and in 2021, I meant to say, and like until we even if we ever see further upside in silver. I mean, the precious metal market is usually diverging with the stock market. If stocks get hammered, well, then commodities usually rise. And if we see, like, if we go to 2008, oh well, actually, 2008, like commodities completely got hammered, and when the stock market broke in the end of 2008 and 2001, you just look at this right here. End of 2008, like boom, and gold. But oh, this is silver. Well, it also broke. Well, I'm talking bullshit. Huh. Well, this is interesting. It didn't diverge. If you go to the gold medal, wait a minute. Oh, right. I've seen an interesting chart being displayed of a YouTuber, Bitcoin-.com-manager, some shit like this. He actually showed that gold has been much less used in producing of computers, or the producing of computers has been lessened by quite a large margin, and the less use of gold coincided with, or worked for a bigger supply of gold, so there has been less demand and more supply, and this, as you might know, usually leads to a lowering of price. And this was around 2012, and this was right here. So since the producing, maybe I can find this chart. Wait a minute. Oh, wait a minute. I think I've seen it. Yes, this is it. 2012 has been the first year in which we actually produced less PCs, as you can see right here, and we've been on a steady decline since then. I don't know about the data of 2017 and 18, but it actually marked the top on gold right here. So yeah, this could also be a reason, and would be an interesting proposition, that gold does not necessarily diverge with the stock market, but also relies on supply and demand in the production side of things. So this is interesting, but nonetheless, I would very much recommend you to watch gold and silver closely, since there are nice price moves ahead. And well, I won't be going over Amazon and Tesla and so forth, since we are already approaching 22 minutes at 25 minutes. So yeah, hope you liked it. Hope you got something out of this. And yeah, I would very much recommend you to watch stocks, especially in the American market and of the USA, very closely. You could enter bearish positions, I meant to say, by breaking off resistance, by breaking off support, I meant. Well, what's going on today? I don't know. Whatever. Yeah, hope you have nice a nice rest of your holidays, and wish you all the best. See you next time. Bye.